Hello, this is Julie. Welcome back to Talk with the Global Group today. We're delighted to have Mr. Peter Schiff. Peter Schiff has led the asset management company Yuropershipik Capital since 1996. Especially, he has made a name for himself as he grew among the Wall Street by predicting the 2008 global financial crisis. Mr. Peter Schiff, it's great to have you on the show.
Hi, my pleasure.
You are regarded as an expert who predicted the 2008 financial crisis, and recently you warned again. You have expressed your opinion that the U.S. economy is facing another crisis. I'm curious as to why you thought of this.
Well, if you understand why we had the last financial crisis, it was because of an excessive amount of debt. Now, a lot of that debt was concentrated in the mortgage sector, but the problem was a lot of money was borrowed that could not be repaid, and a lot of the collateral for the loans lost value. And so that was what caused the crisis. Well, if you look at the United States today, we have far more debt that can't be repaid. It's a much bigger credit bubble than the one that popped back then. And I think the economy is far more dependent on the artificial wealth that was a byproduct of that credit bubble and on the cheap money that fueled it. And so I think as the Federal Reserve is forced to raise interest rates, which it's now doing, and tighten monetary policy, it's going to create a worse financial crisis than the one that it created in 2008, and it's going to have a much more profound impact on the economy than that one did. And that one ushered in what we call the Great Recession, because it was the worst recession since the Great Depression. Well, this recession, which I believe has already started, but is nowhere near ending, I think will be much worse than the Great Recession. In fact, it may even end up being worse than the Great Depression.
What do you expect the crisis to look like? Could there be a sharp downturn in the U.S. housing market? How do you see?
Well, I think the real crisis is going to be in the dollar, which has actually risen recently, paradoxically, but ultimately I think the dollar will collapse. And so the problem is going to be runaway inflation, which potentially could be hyperinflation. So it's not simply that asset prices go down. They may even go up. The problem is the value of our money is going to go down, and in fact, it may collapse.
In the end, interest rate hikes caused by high inflation can lead to economic recession. If so, how much do you expect the Fed to raise interest rates for the rest of this year?
Well, they've been raising rates. I mean, the problem is they haven't raised them enough, but the problem is that they raised them at all. Because in order to fight inflation, it would actually require an interest rate that the economy can't afford, which is why the Fed won't really fight inflation. So it's pretending that it's going to fight inflation. So it's raising interest rates a little bit, but pretending that it's going to raise them enough to actually bring inflation back down to 2% when that's impossible. And in fact, before long, the Fed is going to have to flip and pivot and try to stimulate the economy. Now, the way it stimulates the economy is actually with inflation. So it's really sedating the economy in the name of stimulating it. But that's what the Fed is going to do. And that, I think, could be the beginning of the end, because we're going to overdose on that, that stimulative. And it's going to, result in the death of the dollar.
There are many optimists on Wall Street that the U.S. stock market has bottomed out. Do you agree with this opinion, and why do you view it that way?
Well, it probably has not. I mean, I think that the market is still very expensive, and given what's happening, it doesn't make any sense that it wouldn't go any lower. So I think you still have a lot of downside in the market. Now, of course, if the Fed were to immediately flip and start cutting rates and printing a lot of money, that would probably put a floor under the market and might even send it quite a bit higher. But that would just be in nominal terms. In real terms, let's say priced in gold, if the Fed were to do that, the stock market would crash in terms of gold. And so in other words, gold prices would go way up. That's another way of saying that.
You seem to be pessimistic about the New York stock market. How much will the New York stock market fall at the end of this year? Can you give me a specific numbers?
Well, I wish I knew. I mean, obviously, I could become very wealthy if I knew exactly how much the stock market was going to fall by the end of the year. Look, I don't know. I mean, I think it's going to fall. It could rise. I mean, I don't know for sure. And if it does fall, I don't know by how much. It certainly has a lot of room to fall and still be overvalued. So I think there's a lot of downside risk in the US market, enough that it doesn't make sense to invest there. If you want to invest in stocks, I think there's much better risk reward propositions out there in other countries than what you're going to get in the US. That's why we're focusing for our clients on these international portfolios of investing in companies outside the United States.
There are many Korean individual investors who invest in US stocks. In August, they have bought a lot of semiconductor stocks such as Intel and Nvidia. How do you view semiconductor stocks?
Well, I mean, you guys could just invest in Taiwan semiconductor. But yeah, I mean, obviously, chips are an important thing that so many industries use and buy, and so I think it's a good segment of the market. And the companies that you mentioned are about to get a lot of U.S. government subsidies. They're going to get money, which unfortunately, that was a big mistake, that we should not have a centrally planned economy where politicians decide where capital is allocated. We want the free market making those decisions, because then you have an optimal allocation of resources to their highest and best use. When the government interferes, you get a less than optimal allocation, and so everybody loses. We have higher costs and a lower standard of living. But it depends on the company and the price you're paying. What kind of multiple you're paying for that particular company, as to whether or not it's likely to be a good investment. There are a lot of other segments, I think, sectors that may prove to be better inflation hedges than a semiconductor stock.
Nowadays, oil price is also a hot topic. Although oil price growth is slowing, supply chain disruptions such as the Russian-Ukraine war persist. How do you forecast oil prices, and is it good time to invest in energy stocks?
I think so. I mean, I think oil is in a bull market. I think prices are headed a lot higher. We've had a correction now. We got up to like $120, $130 a barrel. Now we're down at around 90. But I think the trend is positive, and prices are going a lot higher, especially when the dollar rolls over and really starts to fall. That's when oil prices will really start to rise. So we are focusing, on that sector. We're overweight. We've been overweight energy for a couple of years now. So sure, yeah, I recommend that. And I think the energy stocks in Europe are a better value right now than the ones in the US.
You mentioned energy stock and said that they have an inflation hedge. Are there any other stock to hedge against inflation?
Yeah, well, obviously you have some of the obvious type of companies, agriculture companies, right? Because those prices tend to go up quite a bit with inflation. But a lot of other companies that are mining materials that have in the ground, not just precious metals mining companies, but industrial metals. So you have energy, you have basic materials, agriculture. Clearly, those prices rise. And if you own those, commodities, those resources, then, you benefit from the fact that they're now, have are more valuable, they have a higher market price. But also, I think you want to own companies that have the pricing power, that when their costs go up, they can pass on those costs to their customers and not really blow up their sales. So you have to have products that people need and that people will buy even if they have to pay more money. They'll give up something else. They'll cut back someplace else to afford your product. So you want to own the companies that are selling these products that people need. You don't want to be in the business of selling stuff that they can forego if they have to spend more money on what they need. And that's already starting, and that's going to continue. But also, if I'm right on the dollar, inflation is going to be much higher in America than in a lot of other countries. And in fact, I think a lot of other countries, particularly in the emerging markets, they're going to see the purchasing power of their currencies actually rise. So they may actually see a reduction in prices, and that could be a boom for a lot of these economies and a boom for people who have the foresight in investing in businesses that serve those economies and that own real assets in those economies, maybe real estate or other things that are going to benefit from an increasing wealth of the population.
For a while, China was selected as an investment alternative beside the United States. However, as China's economic growth slows, investors' anxiety is growing. How do you see the Chinese market?
Yeah, I think there's a lot of potential in China. Obviously, there's pitfalls along the way. There's always political risk. But I think the fundamentals of the Chinese economy are sound. They're not perfect, and the government has done things to make them less than perfect. But I think there's a lot more going right in China than going wrong, and that's not the case in the United States. So I think that the 21st century will be dominated by China. In fact, I think by the end of this decade, which is not that far away, I think China will supplant the United States as the world's largest economy. And then over the next decade, it's going to widen its lead on the United States considerably.
How about Bitcoin, which is currently in sync with the stock market? Recently, you warned that Bitcoin could fall below $10,000.
Well, I think it's going to fall a lot lower than that, but it may bounce from, at some point, once it breaks 10,000, it doesn't fall in a straight line. You have a lot of diehard fanatics that will buy, but eventually they'll run out of money, and they may still be fanatics, but they'll be broke. But one of the things that the Chinese have got going for them is they've really limited Bitcoin. So when Bitcoin crashes, not as many Chinese are going to lose money, but a lot of Americans are going to lose money, and that's just going to be another problem that people are going to be struggling with in this recession with inflation, is that a lot of people bought cryptocurrencies and they're going to end up, practically worthless.
You are famous for advocating for gold instead of Bitcoin. Now that the strong dollar is pulling gold prices down, is it worth investing in gold?
Yes, I think the strong dollar is temporary, and as is its negative impact on the price of gold. So yeah, I definitely think that people should take advantage of the dollar's strength to buy gold, because that has weakened the price. Now, of course, if you don't live in America, if you're a European, if you're in Japan, gold's making new highs in your currencies. It's just not making new highs in dollars. But ultimately, I think the dollar is going to fall, which means the price of gold is going to go way up. And I think a lot of people who were buying fool's gold, Bitcoin, will discover the error of their ways and recognize that Bitcoin is not digital gold. It's not, a alternative to gold in any way. It's just a pipe dream. It's a Ponzi, a pyramid, a chain letter, whatever you want to call it. But that's what it is. And when people recognize that, then I think a lot of the money that was going into Bitcoin for that reason. Now, there's a lot of money in Bitcoin just purely as a speculation. Just as you said, it's kind of correlated to tech stocks. It's a highly risky asset that has no intrinsic value, but people want to gamble on it. But there are some people that own Bitcoin because they think it's gold. They think it's a store of value and an inflation hedge. And when they realize that they were wrong, then to the extent they have any money left, they may use that to buy gold.
Lastly, what advice would you give to individual investors?
Yeah, well, avoid the U.S. for sure, especially bonds. And I would avoid bonds in pretty much all countries. Inflation is a global phenomenon, and it's the bondholders, the savers, that unfortunately are going to be punished the most. So you have to own equity, but you have to own the right companies that will thrive in an inflationary environment. I think a lot of people are going to make mistakes that will end up being very costly, but they also may overlook some tremendous opportunities that could be extremely profitable. And so that's what we're going to hopefully help people do, is avoid those pitfalls, but take advantage of those opportunities.
네, 오늘은 유로퍼시픽 캐피털 CEO 피터 시프와 이야기 나눠봤습니다. 이 피터 시프는 미국 연준의 긴축 사이클이 계속되면서 경기 침체라는 또 한 번의 큰 위기가 닥칠 것으로 경고했는데요. 당분간 미국 증시의 반등도 힘들 것으로 내다봤습니다. 공격적인 매수보다는 방어적인 전략을 세울 시점이 아닐까 싶습니다. 글로벌 구루에게 듣는다 여기까지입니다. 시청해주신 여러분 고맙습니다.